Sasi was kind enough to hear my limited journey and experience of trying to build a company. But see, the most interesting part about uh, building company is that you talk to a lot of people and can see things from the other side.
Correct.
Right. So Sasi is someone like that. Someone who I can see the world from another lens. Right. So we'll deep dive into Sasi's journey, what he's doing now, what he's up to in life so far. Let's see. Yes, Sasi. So we are before coming here, we are talking about your interest in investing, stocks, public and private markets. So what's all about that? Are you an active investor, or before that, what are you doing currently, and how much of a time is into investing?
So I'm currently working in a construction-based company. I'm a project engineer, civil. So I help build electrical substations. So, if you might have seen, the steel structures that's in the middle of nowhere, and which generates electricity. I mean, not generates; it passes, transmits electricity, and where you end up a lot of steel structures in one place. You might probably see in every nooks and corners there's a substation in your area with the transformers in it. So that's what I am working on. So when you ask me how much time I put into my investing, so I work for 10 to 11 hours a day. So I start at, since it's a construction in Australia, they start at usually 6 o'clock, 6 to 6:30. So I usually go to office 6:30.
It's very early, right?
It is.
Okay.
So everyone wakes up say 5:30 in the morning, and then go back to home probably 5:30. Somewhere around 11 hours. That's the usual work timing. And after that, I probably spend the rest of the time for myself into investing.
Okay.
So probably 4 or 5 hours.
Every day.
Yes.
Okay.
So it's kind of interesting thing who are watching outside of Australia. So our work routine is like, so I'm on a work roster, so that means I work 10 days straight, and I have 4 days off total straight.
Oh, interesting. So you
Yes.
sprint for 10 days and rest for
Yes.
4 days, right?
Correct. And that's saying that, say we do something called as fly in, fly out.
Okay.
Say, for example, if you are based in Chennai, you fly to Mumbai, work for 10 days in Mumbai, you fly back to Chennai. So that's sort of a work lifestyle.
Okay. Do you think this lifestyle is much better than the normal work for 5 or 6 days and take a break?
Well,
Which should you choose between the two?
I think working Monday to Friday, 8 hours is less stress
Okay.
than compared, because I used to work in 21 days straight, 8 days off.
21 days straight and 8 days off.
Yes,
Okay.
10 hours to 12 hours every day, and then totally 8 days off, which will break your mental capacity for sure.
You are fully burnt out and then rest.
Rest for 8 days, but the 8 days goes like anything. So that I would say Monday to Friday is best work lifestyle for your brain.
Okay.
And it's basically because these sort of projects are somewhere in the middle of nowhere. So they have to find people there, so they pay a lot of money to get you there from wherever you are in Australia, and they pay money basically maybe probably twice or thrice than a normal city job. So that's where people
Got it.
that's what is compelling to go.
Okay. Okay. So let's say tomorrow you start a company. Which work culture would you follow? Is it sprint?
Well, I think it's subjective, because say I'm a white collar, so all the engineers are white collars, as we say, and then all the laborers are blue collars. For a blue collar, I don't think, because it's stressful. It's physically demanding for them, but I think they don't really mind. The only thing that they might miss is missing the family
Okay.
because they fly a lot. But for white collars, it's again, you have to think, and you have to deliver the job. So there's a lot of management stuffs involved. So that's why white collars get burned out. So as a white collar, yes, I won't recommend doing that for a longer term. But for shorter term, in order to make quick money, maybe a couple of years or 3 years is fine. But once you get your, if you have a family, then it's going to be hard. But if you are single, then yeah, might be, a good stuff to make some money.
Understood. Interesting.
And yeah, investing is a separate entity out of that.
Okay.
And you got to spend the rest of the time for that.
How did you got into investing? Did someone influence you, or you got interest on your own? Watched someone do it and you want to do it, or saw your parents doing it?
No, not really. But I just wanted to, because I was generating at that point of time, I had a lot of cash, to be honest, free flowing. And then when I thought to start investing, should I buy land or should I invest
Gold.
in gold or silver, or buy a house or stock markets? So and then I thought, why don't we try this? Because we've studied well, probably just why not go and see. So I just went in for the first 1 year. Probably I was just adding bits and pieces of money to not take any risk, because I don't know what I was investing in for the first year.
So you had this high disposable income. You had enough reserves to spend. Of all the asset class that you thought, buying a house, land, or real estate, and then gold or silver, and stocks, and FD.
Yeah.
Of all the things that you had, you thought investing in stocks was more lucrative at that time to you.
Yes.
Is it for the fun, or is it for the returns that it gave?
Well, the first thing is, when I read all the lot of books, for example, Rich Dad Poor Dad, it also tells about investing in stocks, but they don't support stocks. But and the thing that fascinated me was investing in large cap companies like Google or Amazon, that I can be a part of it as a retail investor. So that was what fascinated me in the first place. And when I was looking around the data, like all the large cap like Amazon or Google or Apple, or year on year they were like 25 to 30%. So probably in the range of 3 years, you would get back 1 into like 100%, multiply. So which means if you invest in a bank, FD, or maybe mutual fund, the return is much less. So, and I had a huge risk appetite, and I didn't really care about if I lose. That's I didn't really care about it. So, just went for it. That's the reason, to be honest.
Very interesting.
Yeah.
So, what is the first amount of money that you put into a stock?
Probably think $500 at I was adding like $500. So I get paid every fortnight, which is 14 days. So every fortnight I was adding like $500 into it.
Okay.
And then it was actually a good thing. When I say, the only thing I saw was what's the 52 weeks return.
Okay.
And then if the stock was 20% less, then I would just go and buy it. But it was actually, I don't know if it made sense or not. At the end of a year, the capital was not that much, but I had a 40% return. I put down probably in 10 different stocks.
Okay.
And still I had like, it's not much money, but and I wasn't consistently adding 500. But pretty much I remember probably maybe $5,000, something like that, at the end of a year. and I was still 40%, up.
Okay. So when you put your $500 first, you want to quickly cash out or you want to leave it, let it rest and generate as much returns that it can, and then let me think about selling it after a long period in the future. What mindset you had?
Well, the good thing is I really didn't think about cashing out. I mean, taking out from the platform. But I sold stocks and it was just sitting on the platform. I was just doing like swing trading. When it is high, I just sold it.
Okay.
But yeah, that's what I did.
What is swing trading? Can our audience know in a very simple term?
So swing trading is something like you buy it, and then if it goes, probably sit it there, let it sit there for a couple of months or 3 months, 4 months, and whenever so you have to fix a percentage. If it goes 20% or 10%, then you will take it out.
Okay.
So that was the idea I had.
Okay.
So I just put it there. If it goes 10 or 20%,
Okay. What is the time frame to get this 10 or 20 percentage? Is
Well,
it weeks, months, or days?
totally depends on the stock.
Okay.
It's random.
Okay.
You can get it in a week.
Okay.
You can get it in 4 months. So it's just random. So you just have to wait for that percentage to come.
Okay.
If it is coming, then then that you can take it out.
Got it.
But if it always goes up and down, So, and then I didn't really know how much risk I had. Sometimes if it has gone low, then I would sold it and make a loss,
Okay.
which is a real bad mistake. Now I learned.
Got it. So you bought your first stock for $500. Can you name the company?
I think it is Tesla.
Oh, Tesla. Nice.
Yeah. I think it
So
was
all
Tesla.
your stocks were from the US index.
Yes.
No Indian allocation. No any other countries.
I bought a few stocks in Australian market, but I wasn't really tracking what was going in Australia. I was more fascinated about US stocks because it's all over news and
Okay.
it's
Much
all
easier to
publicly
track. Yes.
available information to read out.
Why not the Indian markets? Because the time difference you had.
No, not really. The worst time for me is to invest in the sense timing. Basically, US stock market starts at around 7 p.m. night in Australia. So whenever I sleep, then the market opens.
Okay.
So it's not actually a good time to be, but to be in a US market versus Australian market because it's just opposite time zone. But for me, not investing in India, I didn't really think about it. That's the answer.
Okay.
I was more fascinated about US. Nothing wrong with the Indian market.
Cool. So, what is so when is the first time you burnt your fingers? You put some money into stock and that didn't go well.
Right. So after first year was going good. So totally my experience in investing is 2.5 years. The next 1 year was fun times. So, and then I had a huge confidence. Okay, we got 40% return. Then I put down, I think, around 25,000 Australian dollars, which is 16 or 17,000 US dollars. And then I put down again in Tesla. I made a bit of money in the first month. I think probably 15%. And then what I did was, so that there's a fascinating time to when you do swing trading, there's a fascinating time called earnings time.
Okay.
So whenever there is an earning, if you think it's going to make the revenue is going to be good on that quarter, you put money and then suddenly it spikes 10%.
Okay.
Because if the revenue comes good when they announce, then a lot of people are going to do some trades on it and it's going to go high.
Okay.
So what I did was I put down in Google. The moment I put down, it crashed 20%.
After the earnings call.
I just put down the day before the earnings call. So on the next day, I was expecting, oh, wait, right, so we're gonna make some money, and then I put down the money. I think I've lost 20% on it.
Ouch.
So then you keep constantly seeing that your money is going down. All the hard-earned money that you're take it from the job, it's going down. And then that was the first loss I had. And then I've taken that money, put down in Tesla back.
Oh, you didn't average it. You didn't try to average it. You exited from the...
Exited from there. I didn't wait for them to come back.
Okay.
Which is
Or
another
also you didn't
mistake
buy
I'd
more
made.
to average your buying price.
No.
You didn't do that.
No. So again, if I had to make average, I need to put down another 16,000 US dollars, which is a lot of money. So then I put down in Tesla, and then it went another 10% down on the same month.
Double whammy.
So it's kind of, then I spoke to someone who is a Tesla investor. So one of the my friend, and then he said, so the real loss happens. It's not when the value goes down. It's when you pull out. So even if doesn't matter if it is 20% or 30%, when you take it out, that's where the real loss happens. Correct. If you leave it there, it's going to jump up, say, for example, a couple of months and 3 months or 4 months. It's just a loss of time. But if you leave it there, you add some more money into it. So you sort of average a little bit, so then the money comes back. So that was the mistake I had.
Okay.
And then I stopped investing for 6 months around, the probably 2020, end of 2023. And then until the mid 2024, I was slowly investing until it, bounced back to the money. Yeah.
Right. So let's say you have like $50,000 today. How are you going to select your stocks, and what is the split that you are going to allocate to them?
Right.
What's your investment philosophy, a core investment philosophy? Do you have anything like that?
So again, this is not a investment advice. It's just my personal advice. So currently, what I say, everyone's risk profile is very different. So for me, what I do is discretionary trading, which is, again, the investment is based on purely what I personally think. It's not based on any math. So what I personally think is the general people who as like retail investors are making the stocks go up and down. So it's again, it's not any graph or it's not any trading methods. It's general audience that if something bad happens to that company, someone makes a lawsuit, people panic and sell. And if someone is say an Nvidia is investing in company like CoreWeave, then the value of the even if it's a small cap, the investment value, the stock value rises drastically. So I personally think a company, it doesn't matter if it's a large cap or medium cap or small cap, if it has a strong support from financial investors or strongly backed by someone who's huge players, then we can go and invest.
Okay.
And I am a calculated high risk appetite person.
Okay.
So I don't go blindly and invest. I just go and do invest and do swing trading in a calculated way.
Okay.
But I'm turning to the point where I'm going to do long-term investing than swing trading.
Okay.
That's where you're going to make a lot of money. Because I personally had a lot of situations where I pulled out of money in, if the
Way
stock
too
grows
early.
in 30-40%, I pull out, then the stock goes like 5 times and 10 times. I made that mistake so many times, really.
Which is your biggest regret until now?
I think Palantir
Okay.
and Nvidia.
Okay.
After I pulled out, the Nvidia, I pulled out around $250 or somewhere around there. I made like, I got in around 250 and then taken out around 400.
Okay.
And then the Nvidia is now valued at 1800, which is around, I don't know how much is it, like, 5-6 times. If I had kept that around 250, now I had a lot of money in my hand, grown. The other thing is Palantir. I went in like $17 and taken out, with probably around 50 percentage. Now it's gone 10 times. It's in $170.
Okay. But the good thing you identified all these very early, but
Yes.
failed to stay until you.
Correct. And yeah, probably that's a biggest learning is if you invest in the right company for a long time, it will do the job for you than being you try to make it work.
Okay. So of the 50,000 that I told, $50 you told, you will be a high risk appetite investor, but you'll take the risk on calculated basis.
Yes, correct.
Okay. So how much of this money will go into a company that is backed by a large incumbent?
Right. So recently I've been looking stocks as like a real estate sort of a strategy. So when you invest, for example, you invest in you buy a land where there's going to be a big stadium coming, and the value of the land is going to go drastically up. Instead, you go and buy a land in the heart of the city. It may double twice in the next 2-3 years. It's not gonna go up drastically. But if you buy, say, in the same goes to stock. If you buy a mid cap or a small cap, strongly backed by big players, then the value of the company rising it to 5 times, 6 times in the next 3 years is so high. That's what I've been recently following, and probably after Trump came in, there's been a lot of surge in AI. So I made like probably 300 to 400% returns somewhere in the middle.
Okay. Interesting.
By investing just in mid and small caps.
So so you're saying finding this is a mix of macro trends and all other factors around the stock than just only the stock, right?
Yes, correct.
Okay. So macro trends meaning the economic factors, political factors.
Well, so for example, that a lot of major platforms have something called as analyst trading, analyst rating. Say, for example, Morgan Stanley, Goldman Sachs, and Citi, Barclays. So these kind of companies, they already do their math and say they put a value on that in the future. Say if a stock value is at $100, they say it will go, probably $130 or $140 in the next 12 months. That means they have done their study based on their, contracts, the balance statement, their, revenue and their cost of operations. And they've already done their study. So you have a straight away answer from them.
Got it.
So it's going to say it's going to 140, it will go 140. But you don't know what's the time it's going to go 140. Probably in the next couple of months. So when I see that sort of trend coming from a large analyst investors, that's a straight yes for me.
Got it.
So I would go and buy. If it's going to make 100 to 140, it's 40%.
Okay.
So I will go and buy it. So analyst rating is my major factor to see.
So, okay, these large fund houses have some analytical rating. They use the data available to them to arrive at a conclusion. Right?
Yeah.
So, you fully follow this, or do you have a gut feeling or a conviction base that you have? Is it more of numbers driven or numbers plus something my own research or my own feeling of understanding of the macro trends?
Well, it's honestly purely momentum
Okay.
built. So now AI is in the momentum. So when you ride on it, you make money.
Okay.
So purely you put your money in the right momentum area, then you're gonna ride that trend. Say if you are investing in, say, in a banking sector, it's not gonna go anywhere
Okay.
in soon time.
Okay. Okay. In this
In
this era.
say
Okay.
compared to AI versus banking, obviously AI is gonna win. So that's a bit of common sense, to be honest. That's it.
So ideally, riding the momentum is
Is the
a
main factor.
way to maximize our returns. right?
Correct.
Do you ever short sell? Have you ever done that? You don't short sell.
No.
You don't do.
No.
Okay. Okay. So okay, you are more of a long-term investor,
Yes.
and you do occasional swing tradings to ride the momentum. Can you define long-term? What is long-term? What is long in long-term? Is it the years that we hold, or is it the returns that we get?
Say probably this is my philosophy. If I might do this swing trading sort of stuff until I reach, say, a couple of $1 million, and then it's about the doubling game. So you don't have to go for percentages. So
Okay.
you have to make one right decision, and if that right decision, it's again purely gut feeling whether it's going to work or not. So if you're lucky enough, then you will make, in, say, I think everyone stays on different time periods. Say if it's in 10 years, if someone has a good luck, that's a major factor,
Okay.
to be honest. So you might get 20 times returns. Who knows?
Okay.
If you're not lucky enough, probably 3 times, 4 times returns. So that multiply is what makes the biggest difference.
Got it.
So when I say long term, that's going to be more one big decision, less stress, rather than me trying to manipulate and make money.
Got it. Makes sense. So, okay, of the entire portfolio that you have, how many stocks that you've given allocation, number alone, and which is your biggest winner, biggest loser?
Can you repeat the first question?
Of the entire portfolio that you have, how many stocks are there in your basket?
Right. So I currently hold 4 different stocks
Only 4 stocks.
right now.
Okay.
So I changed a bit of strategy from last month. So previously I was holding 8 different stocks.
Okay.
So, and then one day I was thinking, right? So obviously I was actually making a win, at least 6 of those in 8. Then, I was actually making a hard time, like, analyzing that stock, then when to pull out, when to invest. So it was a bit of hard. Then I thought, if in order to make a double, you need to make 8 different 8 decisions to make it twice.
Okay.
Then only your entire portfolio goes twice.
Right.
So instead, what I did was I just screwed out and made it 2 major investments and then 2 very small investments, which my 80% of portfolio is in just 2 stocks.
Oh, interesting.
So one is for me personally, it is in ARM. So that's a company that designs semiconductor chips.
Interesting.
So they help companies like Nvidia and chip companies to design. They're like an architect for chip companies. So I invest in that because recently World Bank has invested a huge amount of money into ARM. So in the long term, so that's going to be a big winner.
Okay.
Riding like an Nvidia. So I invested in that. And the second one is CoreWeave. So CoreWeave is again they are like a cloud-based data infrastructure company,
Okay.
and it's heavily backed up by Nvidia.
Oh, interesting.
And
So all this goes back to your initial philosophy of a large incumbent backing them,
Yes.
a macro trend backing the narrative that they are selling,
Yeah.
right? All this correlates with the stocks that you are picking.
Correct. But ARM is already a big player. They are somewhere on, I think, 160 or $170 billion.
Okay.
That they are a large cap company. And CoreWeave is a smaller company. It's not big. They are comparatively small when compared to ARM.
Understood.
So, what I'm thinking is probably CoreWeave will double fast. Thinking probably, take out ARM, put another small stock.
Okay.
Because I'm now confident enough
Okay.
to put a large sum of money into
Okay.
that.
Okay. You told about one being in the semiconductor space and another being a data infrastructure company. So is it technology stocks that's exciting you more right now?
Yes.
Two sectors. Sashi should say two sectors that he's looking to invest at least for the next 3-4 years.
Well, the trend I'm seeing is AI and semiconductor industries, which is technology and semiconductor manufacturing,
Okay.
that sort of sectors. And another thing which I'm looking into is biotech. So again, biotech is indirectly benefiting from AI. So,
How?
for example, so I've been recently looking into a stock called KRRO. So that's the symbol. So when these companies use technology and found something significant,
Okay.
these biotech companies grow much faster than AI-based companies.
Interesting.
So, some of the companies I even seen, like it gone 30 times in 1 month.
Oh, okay.
So, which is you put down, say, $1,000 and you have $30,000 just because they found something significant. So it's a purely based on luck. When I said I put down small amount of money in two, so out of four, my two stocks in biotech.
Okay, got it. So these are like an application layer. So a large technology breakthrough happens.
Yes.
These biotech companies use the technology to bring a bigger breakthrough.
Yes, correct.
They are an application layer to the existing technology.
Yes, correct.
Interesting.
Recently, a company called CRISPR, they found out something in gene editing technology.
Okay.
So they can edit someone's gene, and they can make sure no one's getting a particular disease. So that was a significant breakthrough, and they think in the next few years it's going to be massive.
Okay, like with my limited investing experience, I know there are two kinds of analysis. One is a fundamental, one is a technical analysis. Which approach do you take? Is it more of technical or a fundamental approach?
I'd say more about as combined of discretionary thinking and fundamental.
Okay.
So when you sometimes it doesn't work that way. One good example is Palantir Technologies. So I think currently it's 200 times market cap more higher than what
It was trading.
the current it was trading. So when you see, but people are still buying it. Right? People are still buying it. You don't know if it's going to crash or not, but people keep on buying Palantir. So sometimes fundamental is not working. You even see the revenue is not that high, and it's just purely because they believe in the founder.
Okay.
They are believing in it's a monopoly in cybersecurity, in AI, and
It's future growth potential.
it's future growth. Their growth potential in cybersecurity and their government contracts are multiplying. It's purely based on that.
Got it.
But you might find so many stocks like that, but there's something in Palantir that wanting people to buy.
Understood.
So it's not always fundamentals or technicals. It's sometimes about thinking whether is it famous or not. If it is famous, people are going to buy it.
Yeah.
Then there is momentum.
Plus, is someone else also willing to buy? Is there enough demand?
Yes.
Right.
Same like Nvidia.
Yes.
Nvidia is though they have hire very good contracts in AI because they are monopoly in chip manufacturing, and the company is valued at just 40 times.
Okay.
It's not that high, and it still has a growth potential. But the way it grew from $200 to now $1,800 is massive.
Okay.
It's because whenever you see news, there's always Nvidia. So a lot of people just entered through the retail market.
Okay. When it comes to investing, stock market trading, one thing that people commonly say is we have to be emotionless,
Yes.
right? Set aside your emotions. View stocks as something that you don't own, that you don't have a lot of responsibility towards. Be a very emotionless person, right? How emotionless are you, Sasi? Like, how are you like emotionally intelligent when it comes to picking, buying, selling?
I think I have a good emotional, EQ.
Okay.
So I'm not. So one good thing is when you do any sort of trading, I think the one thing to have is patience.
Which a lot of us don't have today.
Yes. So a lot of people go on panic sell and panic buy when on the right time on. I think I'm not having that. So yes, it's very important, and I think I'm good at it. That's where I made a bit of money.
Is it something you learned over your time or something you thought it was innately present?
I think it was innately present, but obviously you need to, in order to make right decisions, you need to learn from people.
Okay.
But in order to adapt it, I think you need to have it in innate.
Okay.
Yeah.
Understood. So, like, what can someone do to become more emotionally intelligent or emotionally content?
Well, I don't know answer. I don't know the right answer, but I think it's just personal. To be honest, no one can train. I mean, they can get a bit better at training emotional quotient, but I'm not 100% sure it's going to make a lot of difference. But certainly you can train the way, but I'm not 100%. I don't have the right answer for that.
Got it. For me, I tricked myself to become more emotionally intelligent. Like it's a skill that I train myself to be. Right. Do you have, like, of your entire network? Do you have any allocation crypto?
Yes.
You do have.
Yes.
What percentage?
So I've invested. So
Of your entire network, how much percentage is in crypto?
So let me give you a number, right? So currently I'm around $250,000 in Australian dollars. So when I say in that, $5,000 is in crypto.
Oh, very less. Okay.
So I think I've started investing in probably 1 year now, and it has gone probably 30%
Okay. Up or down?
up.
Okay.
Up, but I haven't invested in Bitcoin.
Okay.
But for some reason, I still believe there's some hope that coins like XRP,
Okay.
Dogecoin, maybe I don't believe that cryptocurrency in it, but if I have some good luck, it might
Got it.
go.
Got it. It's
go
like
there.
putting a party fund.
Yes.
If it goes bust, it goes bust.
Yes. Yeah, I don't really mind if it goes down. It goes down.
Have you ever been in a panic mode, like the 2020 COVID crash or the 2000.com bubble, something like that?
Yes, initially when I started investing, I think the first panic was when I bought Google, then it went down. Bought Tesla, it went down.
How much down did it go?
So totally, when I sold Google and then Tesla, probably I was down 30% altogether. So in that, I've stopped investing for some time. I thought this is not maybe for me, and then I let it cool down, and then I made an average of So I have a strong philosophy that when you put in a large cap, you will not lose money. So, and then I put down again, and then it came up. So that was a big panic mode, but I made bigger losses than that after. I invested in AMD, probably a huge money. I went in like $155. The price came actually from $180 to $155. I thought, this is the right time. You make money. I went inside, and the stock went in the next few months to $70.
Oh.
Right? And then I know if I pull out, then I'm gonna lose money. I was there probably 7 months or 8 months. Then it came back to 155. Right away, sold it.
Okay.
So I had a loss of time in that.
So how do you make those decisions? Of should I wait? Should I cash out? Or should I cut down my losses? So what is the decision making framework?
To buy or to sell?
To sell. You entered a stock
Yes.
that is down 30, 40, 50%.
Yeah.
Then how do you arrive at decision saying, okay, I'm going to wait for it to bounce back, or I'm going to cut down my losses?
It's purely because I don't want to make losses. When I say that, when I entered at 155, then it goes down. I know it's for sure it's going to bounce back, but I don't know when. I got only two choices. I pull back at, if it is $70, I pull back that. I accept I've lost 50%. And then put it in somewhere else. And that stock has to go another 50% to make equal.
Yes.
I don't want to do that.
Okay.
So I wait for it to come back at 155. And then, I say, thank you for everything. And then I take my money. I know it's a loss of time. And then I enter into a hope that the next stock will bounce back, make me good money.
Got it.
But the good decision would have been that AMD is a big company, large cap. If I had waited another 6 months, the stock is, I think, currently at $250 something. I would have made money.
Made money. Got it.
So that's the key thing of long-term investing versus swing trading.
Have you ever had this one investment could have changed my life, or is going to change my life, anything like that?
This one investment.
Yes.
Right. I'm thinking because there's a lot of opportunities right now. Because a lot of companies, so, just for your information, probably if someone who, I would say if someone is good enough to do some maths and they can think, and someone has cash of 10 lakhs in dollars, say around $20,000, it would grow if you want to ride the momentum in AI, you put it there in a good stock, which again, I cannot tell you because it's a personal decision.
Yes.
But I think there's a strong possibility that would make 10x in the next 10 years very easily.
Okay.
Very, very easily. If it is a very good stock, you might make 30 times.
Interesting. Got it. So, where do you see this going in 5-10 years? All your portfolio, all your investments, where do you want to reach with what you have started?
Well, I think, so when I said I'm currently at $250,000, I think I will reach $1 million mid next year. So if things are going good.
Without infusing further capital?
Yes.
Okay.
Without I don't have much capital. I mean, when I'm working, you can't add a substantial amount. So I purely have to invest my brain. So thinking of making $1 million mid next year, and then from there, when in investment, when you have a capital, the chance of doubling is much easier. So think of to make $1 million, when you double it. So for example, $1 million becomes $2 million. $2 million becomes $4 million. to make $1 billion, it needs to compound as a double. It will become a $1 billion in 10 years. Right? So 1 becomes 2, 2 becomes 4, 4 becomes 8, 16, 32, 64, 128,
Compounding.
256. Yeah. And it's going to make $1 billion in 10 years when it actually doubles every year.
Okay.
So it sort of looks nice, but the chance of happening, it's based on purely, how well you think, good decisions, sort of luck. So I wanted to reach a point where stop at $2 million and then look into private investments after $2 million. So we'll see.
For someone like you who's in a full-time job, have decent understanding of the markets, had made mistakes, do you think someone like you can build a substantial corpus using markets? Can they build a good amount of wealth using the markets? Do you think that's possible?
What does that mean?
Like, let's say you are in a full-time job, you have enough cash flow to invest in the stock markets.
Yeah.
And then you have enough understanding of how the markets work. Can someone like you can build very good amount of wealth in stock markets in another 10-20 years?
Yes, definitely. So it's not about how, it's again, I would say, strongly say, it's not about only what you think. It's about highly emotional quotient. Say, when you enter somewhere, you have to wait. You have to make a right decision, and then you have to wait.
Okay.
So it's just not about good thinking. So if someone has good cash flow and they're ready to invest, the safest way is to go to mutual funds.
Okay.
They're like S&P 500 sort of mutual funds. And if someone has good risk appetite, then you can bet yourself, but there's no guarantee of return.
Understood.
So it's personal choice. So I wouldn't, make a decision for others.
Is this all leading to you starting a fund or an investment firm in the future, something like that?
Well, I don't have a I might end up in an investment firm in the future. But again, depends on a lot of factors. But if things goes well, yes, I will go into private investments rather than retail investments.
Okay. Now you're exploring, in the future you might explore private investments too.
Yes, it's purely because I don't have the right knowledge and enough capital right now. But in future I will.
Got it.
It's a game of multiplies.
Let's say Tharun comes with $1,000 under his name. He's okay to invest. He's okay to see where that money goes. What would you tell Tharun?
Right.
Would you even first encourage him to invest that money?
Well, again, if Tharun has $5,000, I would say again, go and invest in a mutual fund. And if he has zero idea, just put it there and let it compound in probably in a year 15% on an average, 10 to 15% somewhere. And you might at the end of, if you keep on investing $1,000 every month, you will have a few millions in your bank account. That is for sure. If you don't want to think about any risks involved, purely ride the market, then I would say S&P 500 or Berkshire Hathaway, which is Warren Buffett's fund. So there's places like that.
Okay.
You can go and invest. Don't have to worry about anything.
Okay, so that's nice. That's very interesting. So someone with a full-time job, enough disposable income, can invest in the markets, understanding about the market, how the market works, can have a lot of fun, make some money out of it, right?
Yes.
Cool. Nice sharing your thoughts to our audience. I think a lot of people should find this useful. They can start their investing journey with whatever small cash that they have and learn a lot and then make it bigger, right? right?
Yes, true. So everyone have certain strategies. Everyone has their unique way of investing, I would say. So everyone has to learn by themselves first, and then start investing, put capital into it,
Correct.
and make your risk profile after that.
Yes. Nice.
Yeah.
Thank you. Thanks a lot.
Thanks, Tharun. It was good having a two-way podcast.
Yeah. Probably the first one that I did in a two-way. Either I tortured people or people tortured me. Today I did both.
We did both, yeah. Right.
Right.
That's good.
Cool. Thank you. Thanks a lot.
Thank you.
Yes.